Well, good morning, everyone. Nice to see a few of you were able to drag yourselves out of bed an hour earlier and join us for our Monday morning trading session. Oh my goodness, whose idea was it to bump up daylight savings time by 2 weeks? I think it's a little harder on those of us here on the West Coast because it's like getting up at 5 a.m. instead of 6 a.m. So you'll forgive me if I yawn once in a while. All right, so we just had the markets open up here, and it's kind of a quiet open, actually. We'll take a look here at the Raptor, and you can see not a whole lot going on since where the markets left off. London was a little quiet, a little bit itty-bitty tiny opening gap. Up here, nothing really to speak of at the moment. It'd be interesting to see whether sellers jump in here, as it looks like we're trading right on the trend line. So we're just waiting them out a little bit here. Okay, Andrew. Andrew just letting me know he sent me an email. I'll look for that right after the class here, Adam. Andrew. And we'll get you all fixed up. And what we can do while we're waiting, Andrew says he's interested in crude oil in the chart setups for crude oil. Oops. So let's go over crude oil for Andrew while we're waiting. Now, we'll start here with the Raptor. Actually, oh, come on, Raptor chart, or pardon me, the Hawk. There we go. There's my Hawk chart for crude oil. So the chart setups are actually the defaults for crude oil. I tend to go with a 6-tick Hawk, 8-tick Falcon and Raptor, and a 12-tick Eagle. And that will work for pretty much any market that you're interested in trading. About the only time you get the exceptions is when you're looking at your chart and you have your daybreak lines that look something like this, where you're obviously not producing enough signals during the session to take advantage of. Now, if you want to trade the market this way, end of day, you can see the signals are still valid. However, this is supposed to be a scalping tool. We're supposed to have some opportunities to scalp it during the day. Technically, your profit targets for your Hawk scalper are $50 per contract. However, because crude oil moves so fast, I've actually increased my profit objective to 10 ticks. So I tend to double my profit targets. The idea, however, is that you would like to maintain your risk at about 2% of your capital. Ideally, 5% or less is considered ideal. Right, so there's the Hawk, and right now you can see that crude oil very sideways. Nothing really here to get too excited about at the moment. So we'll put the crude oil chart back. Next we have the Falcon. And the Falcon is set at the default 8-tick. And here we would normally run a 10-tick target, which would be $100 per contract. But again, crude oil, because it's a little bit more volatile, normally a little bit more volatile, I've doubled the profit objective. Now, if you really, really want to go for the high probability target, if we change that back to a 10-tick, you'll see that, the signals have no real difficulty getting to their profit targets, even when the market's a little bit whippy. Well, let's see if it made this one up here. So there's a trend change signal. Oh, look at that. They just hit the primary resistance. It would have been enough to hit your break-even trigger, and then the market reverse would have taken you out of break-even. Let's try another one where the market looks a little choppy. Oh, maybe this one right here. See, that one hit your high probability target. and then reverse. Now, even if we had doubled the profit objective, let's see if we could still get that one with a double target. When the signal produces away from the trend line like this, you always need to cover a little bit deeper. Doggone it. Because you would anticipate the market to retrace back here to the trend line. So here I don't know if that was close enough to hit the break-even trigger or not. I tend to have a 15-tick break-even target on crude oil. But even if it didn't, you would have had to ride out that one swing, and this is the issue. When the signal produces away from the trend line, it's going to have a tendency to try to pull into the trend line before making the next run. So either way the signal worked out, this one would have been a little bit more of a nail biter. This subsequent signal, however, would not have reached the larger profit target. And it doesn't look like it would have even hit the break-even trigger, so that could have potentially been a loss for you right there. Just something to bear in mind whenever you choose to double the profit targets, that sometimes it's not always a good thing. All right, and now the eagle. And once again, I go with the default 12-tick. This is about the minimum that I'll accept for the day break lines. If I see a session like that every once in a while, that's fine. But if I start to see session after session producing day break lines that are just too close together, if it were starting to produce like this, I would consider the market extra quiet, and I would actually roll back my brick size to about 10 ticks instead of 12. But if the odd session like that creeps in, that's not a big deal. And once again here with crude oil, I've doubled the profit objective. So instead of having a 20-tick target, I've gone for a 40-tick target. And usually it will make the 40 ticks. But if you want to go with the real high probability target, here's a hard edge bounce sell signal. We're making a lower high relative to the previous high. You can see it had no difficulty at all finding that profit objective. Whereas if I had doubled it, we would have had to take steps to more aggressively manage this trade. So a little something for you to remember. And last but not least, the Raptor. So here's the Raptor on crude oil. Again, I've gone with the default settings. Of course, the nice thing about the Raptor is you can play with it. You can actually adjust your settings. I do run a double cloud on the Raptor. And in case you don't know how to do the double cloud, this is how you add it. You go to your indicator window and you scroll down here to your indicators and you find the one that says IWRTS Raptor Cloud. If you double click on that, you're going to end up with two clouds in your chart indicator assortment. I have one cloud set at a cloud size of 8 and the other one set at a cloud size of 12. You're going to need to change the colors of one of them. So what I've done is I've changed the band on the 12 tick to a different blue. I chose cornflower blue because it's very soothing. And then you need to change your band color also. Any colors will do, just so long as they're different so that you can differentiate it from the default cloud. And that's about it for the setups on most of those. Okay, it looks like we're getting a little bit of a rally maybe. We're producing a cloud crossover signal here in the Raptor. As well as a first micro-macro cross here in the Hawk and a possible trend change on the Falcon. The Eagle's still content to go sideways. This is still pretty darn choppy. Oh, Andrew asked, what's that blue line? The blue line here on the, I forgot to mention this, pardon me folks, I forgot to mention this because the Eagle isn't normally set up like this by default. Mike Filigera, the fellow who likes to trade the stock market with the DTS system, put me onto this. It's simply your ATR line. You can mimic it with your trade manager also, but to put that on, again, here you go to your indicator window and you'll pull down to your IW indicators and you're going to find one that says IWTM ATR trail. That's actually part of your trade manager. Your trade manager uses this to plot your stops. But if you double click on that, it will also appear down here in your indicator assortment. You don't need to change anything. You may want to make the line a little wider. I made it a little wider so you guys could see it a little better. And then you can apply all that. And voila, you have a squiggly red and blue line on your chart. And all this does is, as I said, it's an added filter. So we like to have the signals in sync. So for instance, here was a red bar buy signal, but it was against the ATR line. So this is a signal we would not have been quite as excited about. Likewise, here was a green bar buy signal, and it was also against the ATR line until this bar right here. So this bar essentially now becomes our signal bar. It's just an added filter. Sometimes I will still take the trade a little bit more aggressively and take it before the ATR flips over, but as you'll see, I usually have my reasons for doing so. I tend to try to get into a trade earlier rather than later, because to my way of thinking, by getting into a trade a little bit earlier, I don't make the market work quite as hard. Good morning, Jim. Andrew, I'll be going over some of the Falcon signals and stuff here as well to give you a hand with those. Jim's shooting some advanced decline numbers our way. So we got about 1,000 on the buy and 1,650 on the sell. So the market, a little bit of a bearish flavor. We do have a real consolidation pattern going on here. And what I'm going to do is, well, shoot. Let me draw a trend line on here. I was going to hurry and get into this one, but you see how this one has a little bit of a bull flag type flavor to it? I'm going to enter it, but I'm going to wait until we get outside of this range. It's a little bit riskier, folks, but we should have more buying if the market can get out this way. Now, this is a 4-arrow consolidation. Normally, we would take the 4-arrow consolidation off of this 4th arrow, so I'm definitely late on this trade. But it may not be a bad thing because the market is kind of drifting sideways. And if I were smart, you know what? I'm going to just go in on this with a onesie. Just enter above the high, cover below the low. And what I'll do is I'll nix my profit target and break even trigger and see if this will run out. So this is what we're doing here. Looking for the breakout. Gold is tailing off a little bit. You think that would spark the stock market, but crude oil is slumping also, so that may be holding it down. Sam is asking about the ATR line. If you didn't catch that little explanation I just did, just pop it into the window and I'll go over it again really quick for you. Or you can also watch the recording later if you like. I don't like it when the market is spending this much time going sideways without a lot of follow through. Like, these are quality signals. We have a first micro macro cross, it goes up, it fades. We get a macro pullback, it goes up, it fades. That's not what we want to see. Jim says the bank index is fading a little bit, so the logic behind that is that the bank index some people believe to be more of a leading type indicator. All right, so here we've got our post 4-arrow consolidation signal, and we're going to get an attempt at a run up. So you might even view this current formation as a little bit of a wedge. The market is wedging a little bit, getting a wedgie. All right, we'll go now to the Falcon. Now, a quick review of the Falcon signals. We're actually working a late filter entry signal here. Notice the filter has not come back into sync. Very important with a late filter entry signal. So with the late filter entry signal, I'm kind of doing these out of sequence, but the late filter entry signal occurs when the filter goes out of sync and comes back into sync, but the trend line does not change color. So right now we've got the trend line not changing color, we've got the signal, but the filter hasn't come into sync yet. So technically that's not a late filter entry signal. Your basic Falcon signal will look like this, where it's your basic trend change signal. It's this guy right here. And the trend change signal, oh, I think we just got filled on the hawk. We did. So I'm going to let that run out. I'm going to delete my profit objectives. All right, so the basic trend change signal occurs when the trend line changes color. And essentially, it's the first signal where everything is in sync. However, we do like to see this little up, down, up pattern. And the first up changes the trend line color. The first down is the sellers trying to fight the market back, trying to regain the downtrend. The second up tells us that the buyers actually have control of the market, and that is confirmed by the printing of the signal. So we get the triangle, the warning dot with the audio alert, the triangle, and the hash mark. This signal tends to produce near this swing point also, where that market makes that little pivot. That is a high probability signal. Let's see if I can find one to the downside. Here's another one to the upside. Now this one's a little bit prolonged. Normally we would anticipate it to develop right around here somewhere. You can see how the market was trying to fight. The sellers were trying to fight it down by all these long tails. But it wasn't until right here when the buyers took it all back. So we have our up. We're down for only a single bar, and then we're back up. And there's our signal. So there's the high probability signal. Here's a trend change in reverse. Now, it depends how you viewed this one. This one developed very, very quickly. This is what we call an early trend change signal because it develops pretty much as the trend line changes color. It's always preceded by this up, or in this case, down, up, down pattern. If you missed that one, you did have the second signal right here with the big down, the itty bitty up, and then the down. It's, unfortunately the market, it tried to produce a signal here. You can see by the wicks on these bars. But it wasn't until prices got down here that it actually produced a signal. You still hit your high probability target. It's just unfortunate that it went a little bit lower than it normally does. See if I can find you a late filter entry signal. Here's one. It didn't get the follow through that it normally gets, but this is still a late filter entry signal. So you'll notice the filter going out of sync, coming back into sync, the market or the signal printing, the trend line never changing color. This tends to be a very high probability signal. Unfortunately, this time, I don't think it got to the profit objective. No. Came up a little bit short. Well, actually, depending where you placed your stop, you may or may not have rode out that swing. It does look like it would have gone low enough to hit our break-even trigger. Small consolation. Oh, and maybe I got a little bit too smart for my own good here. Let's see, would we have hit the break even? Oh, no, not yet. Not to the break even just yet. So this is just your typical dip your toe in the water, see what happens kind of trade. But the NQ very content to go sideways. Because it's just a single contract and it's an amount I can afford to lose, I'm going to try to be patient with this. I'm going to try to hold my stops. If you want it to be more aggressive, you could roll your stop below this low. See this bar with this tail here? That tells us that the sellers tried to drive the market down, but the buyers pushed it right back up. So technically, if the buyers fail at this point right here, then the sellers are likely to run the support. But we'll see. So now they're going to come right back up here to the buyers are pushing, and here they are at 43.48. That's where the sellers beat up on them before. And if we can get through 43.48 this time, we could see a little bit of a run up. Malesh is asking, Eric, how is the E-mini looking on the Falcon? Just one second, I'll pull that up for you. It's going to be pretty similar to the what we're seeing here on the NASDAQ. So we just saw the market breach 43.48. Sellers beating up on them a little bit. Jim says this is brutal. This is a dull market. He says he was short out at 15 on 3 contracts, or he picked up 15 ticks on 3 contracts. Well, that's okay. I know sometimes you got to wait. Sometimes you got to wait it out. This is not your typical Monday morning, by the way. Oops, I pushed the wrong button. What did I do with my chart? Oh, doggone it. Did I delete it? There it is. Sorry. Okay, working a possible first macro cross signal. So there is a glimmer of hope. All right, so let's take a look at the E-mini on the Falcon. Now the E-mini is, unfortunately or fortunately, however you want to look at it, it is obviously a very popular market, and it's because it's so popular, you think it would fit our default settings, and yet it does not. It's one of those markets, one of those rare markets that we need to change our default setting on. So whereas with the Falcon we normally run a 8-tick brick size, I would recommend you go down to our alternate settings, which is a 4-tick Hawk, a 4-tick Falcon, and a 6-tick Eagle. And what that's going to do is it's going to give you a few more trades. If you did not do that adjustment, your E-mini chart's going to look like this. You're just not going to get any signals. Well, pardon me, you will get signals, but you're probably going to end up having to hold them overnight to make them play out. So here's the E-mini currently on the Falcon. And we did get a trend change signal back here. See, the trend line changed color. Here's the down. Here's the up. Here's the down. There's the trend change signal right there. Taken some heat on it, but it looks like it just came down to hit our profit objective, producing some more warning dots. Looks like we're going to get another signal printing there. No real follow through though at the moment. Things just kind of drifting for the most part. Tough to get a handle on what's going on here today. Yeah, you could be right, Jim. Jim says the market's waiting for the Fed announcement on Wednesday. For those of you who are e-mini traders, you may want to incorporate a little strategy that the late Marsh Jones used to use. And what Marsh did is he would watch the mini Dow or the Dow and the NASDAQ. And he noticed that when the Dow and the NASDAQ were in sync and, very important, and both made a quick move, either higher or lower, that he would have a couple of seconds to punch into an E-mini trade, that the E-mini was actually lagging behind the NASDAQ and the YM, the NASDAQ and the Dow. Yeah, so here we are, where you can see the sideways action. It's very plain here on the Eagle. Trade forecaster says we're supposed to be in trend mode for about another 25-26 minutes. We'll see whether or not we get anything resembling a trend here. All right, well, we tried it higher. It looks like we got stopped. I may try this first micro macro cross lower, only because I can cover it above the high. The best thing to do for those of you looking for something to trade, okay, now we're into yellow bars, so I can nix that. The best thing to do, and I know it's not going to be any fun, is you identify this range right here. You don't touch the market until it gets outside that range. And what you're looking for is you're looking for the market to break out and retest. And with that retest, it will give you a signal somewhere. Break out, retest, and give you a signal. That is what you want to wait for. That will be your high probability trade. Anything within here is going to be a little dicey. Alternatively, you could, for those of you who are a little bit more aggressive with your trading, you can try to buy on a limit down here, sell on a limit at the top, and hope that the market stays confined to the trading range. Jim says that's what he's going to try to do, try to sell the top and buy the bottom. I'll demonstrate that for you. I'm more of a momentum style trader myself, where I try to just take advantage of the market momentum. For instance, here's this red bar buy signal producing, pardon me. And what I would be looking is I would be looking for the momentum to take me out of this trading range. But If you wanted to try to use your limit orders, this is what it would look like. You would have to settle on what price you wanted to buy in at. Let's say we're going to buy in at 43.49. Now you need to decide where you're going to place your stop. And let's say we're going to give it, 5 ticks to work out. So there's our trade. So we will sell the market at 43.49 or better. So in other words, because we're looking to sell, any price up here will be an acceptable price. And we will give the market until 43.54 to say we're wrong. Does that get us above the contract high? Or not the contract high, pardon me, but the overnight high or Friday's high? Yes, it does, just barely. And that will cost us $100 if we're wrong. And by wrong, it would be the market breaks out of this trading range and stays outside of the trading range. Now, that can be a very profitable way to trade, because you can see, well, we could even make our risk much tighter than that. I could throw my risk just in above the top end of this trading range, or I can delay my entry until the top end of the trading range. Yeah, you can see scalp mode in about 3 minutes time. So it looks like it's going to stay pretty choppy here. See, if I delayed my entry looking for a false breakout, I could sell 43.51. I could cover up to 43.54. That would only be like a $60 risk. That would be a very low risk trade if it did not work out. Remember too that when you're trading, it's not the frequency of signals that's going to make you the money. It's not trading more. In fact, very often you will make more money trading less. I know, it seems odd, but it's true. Overtrading is a killer. The silent killer. It's not heart attacks, it's overtrading. Possible green bar sell here working on the hawk, but that's kind of micromanaging the trade. We've got a lot of yellow bars starting to crop up here. Obvious sideways range. You could do the same thing here on the hawk as what we're doing on the eagle. The range would be considerably tighter, however. The tighter you make the range, the more likely you are to incur a losing trade. This does have a little bit of a bear flag shape to it. What you could do if you, again, you're really desperate for a trade, you could set it up something like this to buy the failure of the red bar or the green bar sell. But if this market rallies through here, we're very likely to produce a first micro-macro cross signal as well. So I'm showing you these things out of boredom. And Ryman just saved me with a question here. He says, Eric, I noticed when you put your Geiger counter over your charts that it's on top of your bar colors, and my bars are on top of my Geiger counter. How do I fix that? Well, pretty simple, really, Ryman. What you want to do is you want to click on your Geiger counter to make it active. Move your cursor off to one side. It's still going to be the active instrument on your chart. Now hold down your Shift key and roll your mouse, and you're going to see you're probably level 10 of 10. What happens is when you put a new indicator on your chart, or you put an indicator on your chart, it tends to go on the bottom layer. Your charts are actually built a lot like Photoshop, so that there's different layers for each thing that's displayed on your chart. So if you hold down your shift key and you scroll your roll button on your mouse and you bring it up so that it's on level 1 of 10, you'll see that it's over on top of everything. And that's how you fix that. And you can do the same thing for any of your indicators. If there's something that you want to be on the top layer, so you don't want the other chart data interfering with it, just click on it to make it active, and then hold down your shift key and then roll, and you'll see you can move it higher or lower. Not much going in crude oil or gold at the moment. Crude oil almost hinting that it wants to head a little bit higher after this nice little decline that we had earlier, a nice little first micro macro cross signal right here. Market tails off. And when this type of thing happens is we normally anticipate a little bit of a retracement. So the market falls off from the first micro macro cross. Here we go. Right here, first micro macro cross, market falls off. Did a little stutter step here, but normally what we anticipate is that it will get into this 4-arrow consolidation or a macro pullback type scenario. That's usually what we anticipate. So here we are, rather pronounced move lower off the first micro macro cross, and now I'm thinking, we're going to see a macro pullback or perhaps a 4-arrow consolidation. 3 arrows in gold, or in crude, of course. So we're just trying to hang out here, not make any bad decisions, which is very easy to do. I'll point out the first micro macro cross here to you on the hawk. It is at the bottom end of the trading range, so that does hold a little bit more promise. I wouldn't necessarily take it on the hash mark in case the market just makes a false little dip there. You could set it up like this. Yes, technically it's a high probability signal, but remember, you want to take the context into account too. If you have a market which is just going sideways, well, the probabilities go down. Now, as we get closer to this area here, where the trend line is, the signal becomes more inviting to take earlier. Why? Well, because if we're selling, we want to sell higher, not lower. It's hard selling at the bottom end of a trading range. Now, of course, we're into yellow bars, so that nixes my trade attempt. And it looks like we're getting a little bit of a breach. For the most part, though, you're just asking for it. Yeah, Jim says, geez, did the market have a party and I wasn't invited and now it's too hungover? Yeah, it's almost trading that way. This is, in spite of how frustrating it is to try to trade a market like this is actually a very content market. This market is very happy. It's very happy to be trading somewhere around 43, 45. It doesn't get too high, doesn't get too low. It's only got like a 4-point swing either way. Yeah, everybody's just kind of doing nothing. Okay, Sammy asks a real good question. As we get up here, I'm going to demonstrate here our selling of the top end of the trading range. Sammy asks, is there any means to avoid the wrong signal? Like all the indicators are for a buy, but the price reverse and don't go higher. Yes, what we try to do, Sammy, is we try to hold out for our high probability signals. And we'll just watch this one trade here for a moment. You'll see we got filled right on 43.49. Now we're actually profitable. We're actually got a nice little profit at this point. If you're going to do this type of strategy, I think it's important that you consider a much tighter profit objective. And that would be about $100 right there. Let's see if we can't take $100 out of the trade. So pretty much just looking at a scalp type scenario. Ideally, of course, we would like to see the market fall all the way back down here and retest the lows, but hey, the market's moving sideways. We're lucky, or we will be lucky if we can scalp $100 out of this trade. Ideally, the scalper's target is about $50, and I think we saw $60 or $70 there already. I should have, if I were smart, I would have taken that. And since it looks like we've made that swing high, I'll take my stop to break even. And sometimes it helps if you hold your breath. All right. Well, while that's playing out, I'll hold out for the $100 target. We would have hit the profit objective had we gone for just our $50 scalp, but we're going to live on the edge here. So Sammy's asking, is there anything that we can do to improve our probability of success? Yes. What you want to do is you want to focus on your high probability signals. Hold on one second here. Now, some of you will have seen these already. If you don't have them, you can write me and I will send them to you. So for instance, with the hawk, these are the high probability signals that we tend to focus on. Right, so we have our first micro macro cross. This is an exceptionally high probability signal. This signal will be right about 80% of the time, as will the macro pullback signal. Two very, very high probability signals. A 4-arrow consolidation is probably running about 75% accurate. And then we have our post 4-arrow consolidation and our red bar buy, green bar sell. Out of the 5 signals, this last one here tends to be the weakest, but it is still a strong signal if the market structure is correct. And I'll tell you what I mean by that in a moment. Then we also have the Falcon. And I reviewed some of the Falcon signals for you already. Here's the high probability signal, just the basic trend change signal. Would have been nice if it actually printed back here. You can see once again, this bar was struggling to turn into a green bar. If it did, we would have come back with a signal right about there. But as it turns out, the market drifted a little bit and didn't produce a trend change signal until right here. Then we have the late filter entry signal. See, the filter goes out of sync, comes back into sync. Trend line never ever changes color. And then we have your basic trend line touch signal. So what we're looking to do is we're looking to focus on the higher probability signals. That's the best thing that you can do to avoid taking the wrong signal. You can see the hawk produced a lot of signals here, right? There were signals here and here. There's signals here. There's signals back here. But they don't match up with what we're looking for. This one now is starting to match up. This is our first micro-macro cross signal. Micro line crosses the macro line. This is the first signal where everything is in sync. We have green trend lines, green bars, green filter, and of course a green signal. This is a high probability signal for us. Now, given the current state of the market, I know the market's got to break out of this range sooner or later, but given the current state of the market, I might not go in whole hog and throw, my full 2% on that and take a risk that looks something like this, because I'm going to be risking $300 in a market that is obviously sideways. High probability signal? Yes, definitely. 100% correct? No. Right? It'll run you about 80% accurate, 80% win ratio. 80% of the time you will hit your profit target, but that means the other 20% of the time you're going to get tagged for a loss. This is why we always control our risk, why we never risk more than we can afford to lose. So I'll leave it to you to go through your chart and find your first micro-macro cross signals. Here's one right here. And I know you're saying, well, wait a minute, Eric, your trend line's never crossed. Well, the first micro-macro cross also shows a market that goes out of sync and comes back into sync. So notice bar colors go out of sync, trend line goes out of sync, filter goes out of sync, and this is the first signal where everything is back in sync. So technically that is a first micro-macro cross signal. And you can see it came down, hit its profit target, and then a few ticks later started going the other way. Here's a 4-arrow consolidation. This is the 4-arrow consolidation is the only signal I will take on a yellow bar. That's how strong it is. And they always tend to have this bull flag or bear flag type setup. So we have 1, 2, 3, and there's the fourth signal right there. It's on a yellow bar, but because it has that shape to it, you can take it with a great deal of confidence. But I'll leave it to you to go through your chart and find your signals and find these too. So here's a first micro-macro cross, and you can take it and you'll probably end up risking it down here, and yet the signal failed. Why did that signal fail? Well, okay, the probabilities, like I said, are not 100%, but look at what you were doing too. Look at the context of the market. Now, this is in the wee hours of the morning. Normally, the Europeans are nicer people than that, but this time they brought us in on a signal that failed. But the trend, for the most part, is down. And now we're trading back up. Yes, we did have a reasonable test of the extreme, but we're also kind of trading near the top end of this range. Would I have taken this signal? Definitely. I definitely would have tried that first micro-macro cross. And then, well, we'll assume it brought me in on this bar. It didn't bring me in. Oh, actually, let's adjust it so we'll show where it brought me in. So it bring me in right here, and now it starts to move against me, and I'm waiting, and okay, at this point, the market starts to move in my favor. And at this point, I say, okay, if the buyers fail to take out the high and hit my profit target, then it's probably time for me to leave. So what I'm going to do is I'm going to take my stop from down here, and I'm going to roll it in probably right about there. So I have two bars in my favor. The buyers are showing some sort of momentum. And now here come the sellers, and I get stopped out. So I get stopped, but I get stopped for approximately half of what my original risk was. Even if I miss that and I get tagged for the full amount, it's still an amount I can afford to lose, albeit it is an unpleasant experience. So that's what you want to do, Sammy, is you want to concentrate on your high probability signals. Did we hit our profit target? Oh, we did. Look at that. Hooray for us. So we managed to squeak a little scalp out of the eagle here during its sideways trading. I've shown you the high probability trades for the hawk and the falcon. Let me go over the high probability signals for the eagle, and I'm going to have to go back here a little ways. Let me find you a textbook one first. Okay. Here is your basic trend change signal right there. That guy right there. So the band changes direction. It's preceded by a test or a retest of the low and a failure. And now it starts going the other way. And once again, this is essentially your first signal where everything is in sync. It must be preceded by a test of the extreme, a test of, in this case, the low, and a failure, and then the market starts going the other way. High probability signal. After that, we get what we call our red bar buys in an uptrend. Red bar buy signal right there. Whenever the market retreats into the hard edge on the eagle, we expect some sort of reaction. We don't always know what the reaction will be, but we anticipate some sort of reaction. When the bars actually turn red, we get a little bit more interested in what's going on. If we get red bars and a green buy signal, then we get really interested because that's a type of signal that tends to have pretty good follow through to it. And so it drifted a little sideways. Here was another red bar buy signal right there, as was one right here. So you had several, but you can see we finally got some follow through out of that. So that another high probability signal. I'll show you the green bar sell, which we're going to look at in a downtrend here in just a moment. Here's just your regular hard edge bounce. So again, the market comes into the hard edge. You anticipate some sort of reaction. Let's see if we got a rule of 3 signal here before the failure. Okay, it's a little bit drawn out here. We'll go with this one right here. No, actually, we'll have to do this one. Near the end of the trend, the market will start to flounder, and very often it will produce at least 3 signals against the trading band. There's 1, there's 2, there's 3. This case we actually got 4. We call it a rule of 3 because usually we get 3 signals. Sometimes we will get 4, sometimes we will get 2. But the structure is always the same. These signals will always be preceded by a test of the extreme. In this case, the high. The extreme, I mean the high point or the lowest point. And then a failure. So this was the death blow for the buyers right there. So the buyers are struggling to buy it up, red bar buys, right? Hard edges, we're expecting some sort of reaction, and yet the market keeps slipping below the hard edge and producing a sell signal. No, not just once, not just twice, but 4 times. And that last signal was preceded by a decent retest of the high and a failure. Now, I wouldn't necessarily sell it right on the hash mark. You could, but very often I'm a little bit more of a chicken. I'll take it below the low and maybe cover it above the high, that type of scenario. Brings you in, flounders around a little bit, and I think it finally headed lower. Well, low enough to at least hit my break-even trigger. This is a little bit choppier than it normally unfolds. Normally, you'll see this type of thing develop, and then the market will just tail off. It'll set a new trend, and somewhere through here, it may retrace for a little bit and come back into the trading band and produce a proper trend change signal. Like that very first one that we looked at. And then it will continue lower from there. Let's go back to the very beginning. We'll see if we had a rule of 3 going the other way. No, not quite. Just had one. Oh, actually we did. Here, let me make this bigger. Okay, so we're in an obvious downtrend. The market starts producing counter-trend signals. So there's counter-trend signal number 1. Prices go up, they come down, we're getting green bar sells, we're anticipating at least a retest of the low. So would I sell that green bar sell? Definitely, yes, absolutely I would. So prices start to come down, now they start to reverse, and now I'm thinking, okay, well I got to do something with my stop, so I may roll my stop in a little bit, but I get much more aggressive after this signal right there. Why? Because this is our rule of 3 signal. Now I know you're saying, well, Eric, there's only 2 signals against the trend. How can it be a rule of 3? Because the structure is there. You have a market which has rallied and now produced a buy signal. Sellers have failed to resume the downtrend. The market comes back and you produce another buy signal. So you have the structure of a rule of 3, even though there's only 2 signals which are counter trend. And again, I'll let you look at this for yourself. Am I missing anything? No, we're not missing anything. But the best exercise you can do is actually go through your chart and try to spot some of these things. And of course, if you have any questions, you can, just save an image and email it to me, or you can email it to me directly from your chart. And I'll do my best to clarify for you. But see, here's a textbook green bar sell. This is the opposite of the red bar buy. This occurs in a downtrend. Here's another one. The market is in a downtrend. It encounters the hard edge. We're expecting something to happen. It comes back with a green bar sell. Would I sell that? Definitely I would. Absolutely. I know it's a high probability signal. Market goes down, comes back into the hard edge, hits the hard edge, comes out with a green bar sell. Would I sell that one? Absolutely. It's a high probability signal. Sammy asks, should I not buy or sell at the hash mark? Well, the hash mark is a suggested entry. Computers being what computers are, they have no room at all for anything ambiguous. So we had to give the computer a definite buy or sell point. And that buy or sell point is the hash mark. It is always one tick above the high or below the low. If you're using your squiggly red and blue ATR line here on your eagle, you can see the hash mark produced right here, but it's against the ATR. So we would actually not take this signal if we're using the ATR as a filter. We would not take this signal either because it's still against the ATR. It's not really until this bar right here that the ATR comes into sync. So now what that means is that this bar right here essentially becomes our signal bar, and we would enter one tick above the high of this bar. And now we would be long on this trade. With the other tools, for instance, let's take a look here at the at the hawk. Okay, I'm producing a signal right here. The hash mark is right there, but the high of this trading range is only like 2 or 3 ticks further. If you feel better about offering up 3 ticks to enter above the high, then by all means do that. I do this all the time. If I'm at the top end of the trading range, or even a little itty bitty swing like this, I may choose to enter above this little swing high rather than on the hash mark. Now, if the trade sets up like this, well, there's no point in entering below the low if I'm going to take that first micro macro cross. Why? Well, look at, if I take it on the hash mark, see, I would almost have to give up all my profit before I even get my entry. I'd have to give up 9 ticks of profit before I get my entry, and then hope and pray that the market still has enough momentum to take me another 11 ticks further to hit where my profit target would be. Your high probability targets are always calculated from your hash mark. So if I choose to delay my entry until down here, well, my high probability target does not change. It is still 43.38 half. So this becomes now a matter of logistics, where it makes no sense to enter late because I'm giving up almost all my profit objective just to gain entry. In this instance, the probabilities of entering early are actually in my favor. So this is a case I would take the market right on the hash mark. If I didn't feel good about the trade, if I thought, okay, well, the market's too sideways or something, I'll dial down the risk, or I'll go to manual mode and I'll only throw in a 1Z. But it's a good question. Like here we're getting another signal. Now this is not one of our high probability signals that we focus on, but here I'll do something similar to what you saw me do a moment ago, where I just drew a trend line. Okay, my hash mark is right there, the trend line is right there. There is a chance that the market will engage my order, bounce off of the trend line, and then start trading lower. So can I enter above the trend line? Absolutely. You know, at the end of the day, it is your money, right? You have to do what you think is best. And in this case, I'm only giving up maybe about 2 ticks to get entry above the trend line, and maybe that I'll feel better about the trade that way. But like I said, very often it becomes a matter of logistics where you don't want to delay your entry too much because you're giving up too much of your profit target. See, if we looked at taking this signal, it's the same thing. Why would I enter above there? That would make no sense, because if I took the signal here, you can see I would give up my entire profit objective before I even get my entry. And of course, the same thing is true of the Falcon also, where, you know, the market's moving a little bit sideways. I'm producing a signal here. Would I feel better about entering above the median line and above the high? Yeah, maybe I would, because, you know, it's a sideways market. How much do I got to give up? 1, 2, 3, 4 ticks. So I'm giving up about a quarter of my profit target to get the delayed entry. But I might feel a little bit better about taking a delayed entry there. But of course I have to balance it with the fact that, hey, this is a late filter entry signal, isn't it? And I know that's a higher probability signal, so maybe I'll take it, you know, on the hash mark and cover below the low. That's the other thing about entering earlier, is very often you can cover a little bit deeper. And regardless of the situation, whether you chose to delay your entry or enter on the hash mark, it looks like the market did creep high enough to hit our high probability target. The thing with the signals too that you're going to want to remember is that you want to be alert to take the early signal. Like if it looks to you like, okay, the market's making a trend change, okay, we got the late filter entry. Here we're going to throw in an order here. The market is obviously sideways, so you don't want to keep your exit stop nearby. Right? You're just asking for it. You're just asking for it with a tight stop like that. What you need to do is you need to be prepared to risk your trade as far back as you can, ideally below, in this case, below a major swing point. In the downtrend, we would go above a major swing point. And you're going to do your best not to fiddle with the trade too early. When the market starts to swing like this, you're getting a couple of swings higher. Okay, now it's time to take your trade and maybe roll it down here, or maybe even, you know, here, or maybe even here. But when you're in a sideways market, you don't want to get too cute with the market. You don't want to be too aggressive with your stops. Remember, your stop is only a loss if it gets hit. If you keep it out of the market's way, it's not really a cost. It's your safety net. Okay, so it looks like we got a couple signals there, drifted a little higher. We had our first micro-macro cross here in the Hawk, which had a nice follow through. We had our late filter entry / trend change developing at the same time here at the Falcon. And now we've drifted up to the primary resistance line. Had a nice little trend change signal here on the Raptor also. And again, this one took a little while to develop. The clouds crossed over, the market came into the cloud, came out, produced the signal, actually did not engage at that point, came into the cloud again, a double pullback came out. This was actually our first signal right here. Our first high probability signal on the Raptor. This bad boy right there. And here too, you're going to want to run a relatively deep stop. Maybe below the low of the morning, certainly at the very least below this swing low right here. And given the choppy nature of the market, I'd probably even offer up a couple extra ticks. I wouldn't put it just one tick below. I probably would put it like 4 or 5 ticks below. And once again, all I'm doing is I'm trying to take into consideration the context, the nature of the market this morning. The market has no trend. If I'm going to get into this trade, there is a chance the market may come down and try to retest the lows. And how often have you seen this happen? Where the market gets 1 or 2 ticks below the low, hits your stop, and then goes up to your profit target without you, right? How many times has that happened to you? If you're like me, probably a few more than you would care to admit. So knowing that, we're going to run our stop a little bit deeper. And in this case, it wasn't so much an issue. The market picked up some momentum and just kept on going. But there is that chance, right? There's always that chance. Remember how I was telling you to wait for the breakout? So we had our established range. Oh, look, we got a breakout. Oh, look, we got a retest. Oh, look, we got a buy signal. So there was our high probability buy signal. And we got those across the board. Right, here was the top end of our trading range. Well, actually, our signal produced just on the breakout here with the eagle. Probably have to lower our range a little bit to get the actual breakout, retest, and the signal. Now this all developed, more or less on a couple of bars. On some of the other tools, it's a little easier to see. Here on the Falcon, here was the top end of the trading range. Here was the breakout. Here was the retest. Oh, and there's our signal. Right? There's our high probability signal. Oh, well done, Jim. Jim says he took the YM long at 99 and out at 21. So it picked up another 22 ticks on that one. Well done. Good for you, man. And he says the advanced decline getting a little bit stronger. So we've got 1150 on the buy now and just under 1700 on the sell. On the surface, still kind of bearish looking, but when you compare it to the other numbers from where it started, it's definitely more bullish. But overall, a little bit of a quiet day so far. We'll hang out for a few more minutes, but I think I don't think we're going to see the market really bolt one way or the other today. The E-mini making a nice little trend change here on the Falcon. Again, a late filter entry slash trend change signal. So the trend line changes color. Now we're going to be on the alert for the up. There's the up portion. Here's the down, and there's the up. Everything is in sync. That's a high probability signal. High probability buy right there. And now it looks like they're kind of putting in the top end. So at this point, it becomes us all about market structure, all about the price structure. So if we see at this point prices come down into the trading band here, they come up, and they come up short of the high, where do we think it's going to go from there? Class. The market comes down into the cloud, starts to rally up, and now starts to, make a bar lower and a bar lower. Where do we think it could go from here? Yeah, that's right. Everybody's saying it looks like it's going to go down and test the lower end, probably to the hard edge. Probably a retest of the lows right here. That's what I would be thinking. At the very least, this hard edge. So 43.50 and possibly 43.46, 47. That's right. You guys all get a gold star. Well done. Sammy's asking, could you please review that ATR line? Absolutely. Let me go over that for you real quick here again. And regarding the recording, folks, the recording will be up at the Indicator Warehouse YouTube channel. So if you go to YouTube and search Indicator Warehouse, you're going to see that we have our own channel, and that's where the recordings are posted. So once again, I'm going to have to tell Ben to throw this ATR line on here because it does seem to be a nice little added filter. But until then, you're going to go here to your indicator window, and you're going to find in your assortment, you're going to find the one that says IWTM ATR Trail. So it's part of your trade manager. You're going to double click on it, and it's going to appear here in your assortment window, and that's all you need to do. After that, just click apply and OK or close, and voila, there it is. And like I say, we're just going to use that as a little bit of an added filter to help gauge some momentum. All right, so we got the sellers trying to put in a top, the buyers looking to re-rally the market, hence the macro pullback signal here. Again, we're not getting a whole lot of momentum out of the market this morning. It might be something you may want to try with just a onesie rather than go in whole hog. We should see a retest of this high before the market fails. Things are so slow. Come on. Problem with entering trades as the market progresses is, while it's one thing if the market is very strong. And how do we know it's strong? Well, you can tell by the momentum. The bars just start unfolding very quickly. When that happens, really you just want to hit the buy or sell market button, whatever the case is, and just get in because you know the momentum is there. In this instance, we are seriously lacking momentum. Again, you can tell just by how long the bars are taking to form. You know, there's not a whole lot of activity here since we opened. There's the open, drifted sideways. Here's the first real rally, so to speak. It's not a rally, but prices did go higher. And if you end up getting too late into the trend, well then, of course, you're going to catch yourself on the wrong side of the trend. So here we are now chasing this macro pullback lower. And honestly, it's not a real good signal. All right, well, we'll just leave that to stew. And Sammy asked the question, what's the point of having two clouds on the Raptor? This was actually developed by one of our owners, or a couple of our owners. One of them was Ricardo. And you can find out more information about this at the Raptor Trading Forum, at the Facebook forum. And I'm sorry I don't have the address to that right in front of me, but you can write Adam for it. Write Adam for the address on that. And Ricardo found what Ricardo was following were the hard edge bounces. And what he found is that sometimes the market would go a little bit too deep, but it would still have good follow through. So what he started doing is he expanded one of the bands to account for the slightly deeper bounce that may originate. So it's essentially gives us our directional bias. It also gave us a cloud crossover signal, which tends to have a pretty good follow through. So when the clouds cross over, we look for the market to come into the cloud and then to come out of the cloud in the same direction as the crossover. And this one took a little bit longer, but that's what eventually led to that little bit of a rally. To put the second cloud on, you're going to go here to your indicators. And once again, you're going to go find your IW RTS Raptor cloud and click on that so you have two clouds. Oops. I've set my first cloud at 8 ticks. The second cloud is at 12 ticks. You do need to change the cloud color of the second cloud. You can change it whatever color you want so long as it's different than the first cloud. And you also need to change your band edge, just so that you can tell the difference between the two. And then when you're happy with that, click apply and OK, and voila, 2 different bands. So it gives us 2 main points that we're looking at for the market to offer some sort of support. So in this case, 43.50 and 43.47-ish. All right, so we finally got long here. Malesh is asking, UB is looking good for a long on the Falcon. UB. I'm sorry, I'm drawing a blank on that symbol. Which one did you mean? Did you mean the E-mini? In which case, let's go take a look here at the E-mini. Well, we had our buy signal back here. Oh, on the bonds. Oh, yes, of course. Okay, we'll dial over to the 30-year bond here, the ZB. Oops, and I should be in the June contract. Hold on a second. Looks like they're still trading the odd bond here in March. Okay, so hold on a second, bear with me. I'm going to dial up the June contract because you're probably watching June. Oh, the Ultra bond. All right, hold on. Let's see if I can get that one. Oh yeah. All right, it's just loading. So here was our macro pullback signal. I should have actually adjusted it to take it on the hash mark. Why do I want to take it on the hash mark? Well, again, because we're expecting a retest of the high and that the market might be failing. Right? So I want to get in early so I don't have to make the market work as hard to get to my profit objective. We'll roll that up a little bit. Okay, so here's the Ultra bond. Honestly, I've never looked at this one. So here we go. Malesh is asking, is it set up for a buy? Well, we did get the buy signal right here with the trend change, right? We have the up, the down, the up. Now we had the trend change or an attempt at a trend change lower, and now we're coming back with the beginnings of a trend change higher. We don't simply buy or sell just because the trend line changes color. We have to wait for all the variables to come into place. See, even though the trend line changed here and we produced a signal just before the trend line changed color, this was the actual signal right here. And that was followed by another trend line touch signal. And you can see that it had very good progression after that. Market went a little bit sideways, produced a buy signal, a little bit of a rally. I would not consider this to be a buy signal because the trend line and the filter were still red when that produced. See that? You're correct in assuming the market structure is there. You know, we are making a higher swing low. But as far as the signal itself goes, no, the signal's not there yet. It's not to say it probably won't go higher. Malesh says he's looking at 8 ticks. Let's take a look at the 8-tick brick. Oh yes, no, you're right. On the 8-tick, you are working on a buy signal. You're absolutely correct. See what I mean about the daybreak lines, though? Well, I guess they're not too bad, but they're a little bit tight through here. So unless you're holding overnight or for a few days, you can see you're not going to get a whole lot of opportunities. So this is one of these markets that you're going to need to consider adjusting your brick size a little bit, just so you get some signals or a few more signals. If you're planning to day trade, if you're planning to hold for several days, then this is just fine. Otherwise, you may want to go to a slightly smaller brick. I would try the 4 ticks first. And you can see you're going to get a couple more opportunities with the slightly smaller brick. All right. Just a couple more questions and we're going to wrap things up here. Sammy's asking, what is the RMA for? I'm not sure which one you're referring to. The RMA is an indicator actually developed by Ray Burke. Oh, maybe you're looking at the Raptor. I don't know if the RMA is on the Raptor. I don't think, well, maybe it is. I don't know. That's about the only one that you can adjust anything on. I don't see it. At any rate, the RMA is a indicator that was developed by Ray Burke. It's a moving average style indicator. So there's it's available there to you if you want it. And then Sammy asked, why can I not find the ATR indicator? The IWTM ATR trail is part of the trade manager. What you're actually doing is you're imposing the same strategy that the trade manager uses for calculating your stops. So that's the one you want to look for, IWTM ATR trail. And you'll have to have your trade manager or a trailblazer loaded for that to come up in your assortment. All right, you guys, we're going to button things up here. There's not a whole lot going on. Hopefully things will loosen up a little bit for Tuesday's session. Give us a couple more opportunities. If you're trading this afternoon, I think you can look forward to more of the same. All right, you guys, talk to you tomorrow. Bye for now.